The advent of a recession means trouble for your investment portfolio. The economy is contracting, markets are failing, and risky assets are losing value. At times like this, experienced investors rotate into recession stocks that perform well or lose less value. During economic contraction, welcome to the Financial Markets Examiner YouTube channel, where you learn about forex, crypto, and the stocks market. Today on this channel, we'll see the 5 best recession stocks of 2023, so let's get right into it. Recession stocks are defensive stocks that can sustain growth or limit their losses during an economic downturn because their products are always in demand. The best recession stocks include consumer staples, utilities, and scale companies, all of which produce goods and services that consumers can't do without, no matter how bad the economy gets. 5 best recession stocks of 2023. 1. Becton, Dickinson and Company. Becton, Dickinson and Company is a manufacturer and distributor of medical and surgical products, such as syringes, needles, and medical disposal units. The company's annual EPS has risen nearly 33% over the last 5 years, and analysts expect almost 9% annual earnings growth over the next 5 years. Declines in shares of BDX have been limited to 30% over the last decade. That may still seem like a lot, but it's much lower volatility than the majority of stocks. Even the SPDR S&P 500 ETF had larger declines during that period. Becton offers a decent dividend yield, and the company has been growing the dividend payout by almost 4% a year over the last 5 years. In fact, the company has been raising a dividend payout for more than 48 years, making it a member of dividend aristocrats. 2. Thermo Fisher Scientific Inc. Thermo Fisher Scientific sells laboratory equipment and instruments, diagnostic products, and other health-related items. Analysts estimate TMO's annual earnings growth should decelerate to around 5.8% over the next 5 years, down from a yearly growth rate of 20% over the last 5 years. When Thermo Fisher Scientific excels in its stock performance, TMO is the best performing recession stocks on our list. Outperforming all others, the company has sustained an average annual return of more than 20% over the last decade, and it's beaten a total return of the S&P 500 by nearly 13%. The company's dividend game doesn't quite match its shares performance. Unfortunately, it has the lowest dividend on the list at 0.3%, although it has delivered the highest dividend growth rate. Dividend payments has increased an average of nearly 15% per year over the last 5 years. 3. Merck and Company Inc. Merck is a pharmaceutical manufacturer with products and vaccines treating with a wide range of diseases. The company makes pharmaceuticals for humans as well as animals. Merck has seen steady growth over the last decade, and analysts expect the growth to continue. The company's earnings per share have grown by an average of 47% per year and over the last 5 years. Analysts expect nearly 12% annual earnings growth over the next 5 years, the highest rate of growth on this list. All the stocks on the list are more stable than the majority of US stocks. The largest decline in end market over the last 10 years was 28%. More than half of S&P 500 stocks have declined over 50% during that time. Even with lower volatility, MRK has managed to outpace the S&P 500 over the long term. Merck also pay a healthy dividend, and the company has increased the payout by an average of 67% per year over the last 5 years. 4. PepsiCo is one of the world's largest beverage and snacks company. Besides Pepsi, its largest brands include the likes of Gatorade, Lay's, and Doritos, plus many others. The company has sustained earnings growth of more than 50% a year over the last 5 years. Analysts expect this rate of earnings growth to decelerate to about 8% over the next 5 years. Steady growth has meant lower volatility for Pep, with the biggest decline over the last decade being 30%. PepsiCo is the only stock on the best recession stocks list that slightly outperformed the S&P 500 over the last decade. PepsiCo has averaged 12.1% annual gains, while the SPDR S&P 500 ETF has averaged 12.6%. For those seeking dividends, PepsiCo has steadily grown a dividend payout for more than a decade. Currently yielding 2.7%, the dividend amount increases by about 7.4% per year on average. Like Bitcoin, Dickinson, Pepsi is another member of the dividend aristocrats. 5. CMS Energy Corporation. The CMS Energy is a utility company providing electricity and natural gas to consumers in Michigan. The company is an all-around solid performer with annual earning growth above 10% over the last 5 years and 8.2% annual growth expected over the next 5 years. CMS's largest price decline over the last decade was 30%, and the company has outperformed the S&P 500 slightly over the same time frame. Better returns for lower drawdowns are the hallmark of a good recession stock. CMS pays one of the largest dividend yields on this list, and the dividend payout has grown at an average rate of nearly 7% per year over the last 5 years. Other top stocks include American Corporation, Excel Energy NC, the Danaher Corporation, and so on. With this, we've come to the end of the video for today. Remember, this is not for financial advice but for educational purposes only. Kindly subscribe, share, and like after watching. Thank you.